Ladies and gentlemen, welcome back to the channel. We had a crazy day in the markets today. I want to go over exactly what's going on, some of the problems that could be coming next for our markets, specifically stocks like Nvidia, some of your AI stocks, and what the data is going to be tomorrow that could also be impactful to our markets. Hit the like button, subscribe to the channel, let me know what you think about this information down below in the comment section. So first things first, today you could really categorize as a sell-off across the board, a sell-off of big tech, a sell-off of pretty much everything. Nvidia was one of the bigger drags on our market, with Nvidia falling over 4% today, leading the S&P, the Nasdaq down well over half of 1%. AMC stock in the grand scope of things is kind of doing its own thing, only down about 3%. That's actually pretty dang good. If you know AMC, a day like today should have been really bad for AMC. In fact, it wasn't that bad. Okay, so I'll take that any day of the week where AMC is only down 3%, whereas Nvidia is down 4% or so. So I want to say that right off the bat, AMC relative to other stocks did okay. Now, some of the, I guess, the biggest stories of the day today are what I went over in the last video. PPI came in way hotter than expected. PPI month over month came in at 0.6%. Month over month, and that was a lot hotter than the estimate of 0.3% month over month. PPI has a close correlation to PCE, so basically we're in a situation where every single inflation report that we have gotten in 2024 has been hotter than expected. Now, the narrative to why stocks have done well in 2024 is, who cares? The Fed's going to be cutting rates. Even if inflation starts to come in hotter than expected, the next move from the Fed is rate cuts. And I'm here to tell you that that's a dangerous game to play when you're basically playing chicken with the Fed and the data. The data is saying the Fed's probably not going to be cutting rates. The markets are saying the Fed's going to be cutting rates. Which one's correct? I don't know. We're going to know more coming tomorrow. Not tomorrow. We're going to know more coming next Wednesday when we get the Fed meeting and the summary of economic projections. But there's a real chance that the Fed, to some degree, rug pulls the markets here, right? The Fed could give us some really freaking bad news, okay? And we're just not prepared for that in terms of the markets right now, right? You can see that in Nvidia, you can see that in the SPY and the triple Qs just on the headline basis. We're just not prepared for no rate cuts, or maybe even the possibility of a hike. I think when you look at inflation historically when you get a big spike in inflation, you get another spike in inflation. I don't think the Fed wants to back themselves into a corner here and, make it so they have to start cutting rates. If the data supports the Fed raising rates, I think the Fed wants to be in a position where they could do that, where they don't necessarily have to straight, full on rug pull the markets, right? So I think that's pretty problematic. That's a problematic scenario to be in, if I were to say so myself, right? I just don't think the markets are prepared for that. Now, retail sales came in worse than expected. Last month, you were revised down to negative 1.1%. For the month of February, you came in at positive 0.6%, which was lower than the estimate of 0.8%. So it wasn't so low. It's like, oh my gosh, are we heading into a recession? But it wasn't, too hot as well. So it was kind of, if you will, a sweet spot, but it doesn't really change I guess the PPI numbers. I think the PPI numbers at that point really outweigh the retail sales data that we got today, because retail sales, again, it didn't like skew towards one direction or the other. It wasn't super good, wasn't super bad. So when you just specifically look at the PPI, that says the Fed's in a bit of a problem right now, whereas the Fed has just so aggressively, it almost feels like in 2024, has forecasted these rate cuts when the data has really not played along with that. I think coming next week, there's a chance that you could ultimately get rug pulled by the Fed. And you are in this blackout period too. So you're in a blackout period. So we're not going to hear any Fed speakers, and you're getting all this bad data. So we're really not, I guess, positioned or forecasting a hawkish Fed. And the Fed's really not going to have any way to communicate any change coming next week, today or tomorrow. So I think that is a little bit of a problem. Now, today and after hours, you are going to get some earnings from Adobe, Blink, Ulta Beauty, PagerDuty, and some other stocks. Tomorrow morning, you'll also get some earnings. Not going to be that important for the markets overall. But we do have some data coming out. Now, I don't want to say they're not important for the markets overall. Adobe could be very important for the specific AI trade because let's be honest, right? These companies that are buying these GPUs, they need to start seeing some returns on their investment or CapEx budgets are going to decline. And companies are going to stop buying as many GPUs. I think Adobe is really one of those companies that could start to see the actual payoffs of AI a lot quicker. Now, if Adobe signals they're really not seeing any payoffs to their AI projects so far, I think that's going to really start to put into question how big these CapEx budgets are going to be for AI, for semiconductors, right? And that could be a larger problem for NVIDIA, maybe partially why NVIDIA is selling off down about 4%. Now, next week, you're going to have an event coming on Monday. That is the GTC conference for NVIDIA. And there's like 90,000 people that are going to be here at that conference. The expectations are very high. The hype is very high. Could you get a buy the rumor, sell the news kind of event? Sure. People are not really buying the rumor, though. So you could see a sell the rumor, sell the event kind of situation. Would I bet on that? Probably not. It really depends on what's announced from NVIDIA, if there is anything that could fundamentally be important for the company going ahead into the future that maybe could change the way people are looking at NVIDIA. Because right now, NVIDIA is really just a hardware company to enable AI. And again, if you don't see companies actually using NVIDIA hardware to generate some returns from their investment in these GPUs, that's just not a fantastic position to be in, right? As a company buying these NVIDIA GPUs. So you definitely want to see someone start to actually get some return on this AI story, which could be Adobe here in after hours. We'll have to wait and see. Right at about the time this video is coming out, we should be getting Adobe earnings. Adobe sometimes is like 20 minutes after the bell as well, so maybe it'll take a little bit of time. But again, in the grand scope of things, AMC stock is doing pretty well today. Tomorrow morning, you are going to get some data coming out, which is going to be the Michigan Consumer Sentiment Survey. Now, the most important thing with this survey is the inflation expectations, or that's what tends to be the most important thing. You're going to get 1 year and 5 year inflation expectations. If 5 year inflation expectations specifically start to go higher, that's where it's pretty problematic, right? Now, there's a lot of different gauges of inflation expectations, 5 year break evens, things of that nature that the Fed references. But the Michigan Consumer Sentiment Survey is one of those, kind of inflation expectation barometers that the Fed looks at. 5 year inflation expectations are expected to stay at 2.9%. 1 year inflation expectations are expected at 3%, the same numbers as last month. So if you get a tick up higher there, that's a problem. Now, these numbers can move around quite a bit. If they do spike, they can spike quite a lot. So we'll see if that happens. I don't know if that's going to happen. You are also going to get some other numbers like Michigan consumer expectations. That's expected to fall a little bit from 75.2 to 75.1. Michigan current conditions are expected to fall from 79.4 to 79.2. And then your inflation expectations. Your headline Michigan consumer sentiment number is expected to come in pretty much in line with last month at 76.9, which again, same number as last month. So we'll see what ultimately happens there. It can give the markets quite a move, but I think it really comes down to the 5 year and 1 year inflation expectations, whether or not we get some kind of big move based on tomorrow's data. Now, something else to keep in mind is there is trillions of dollars worth of options expiring this week. like 4 trillion or something along those lines of derivatives expiring. So that can lead to more volatility. This triple witching event tomorrow. It doesn't historically lead to more volatility, but it definitely can. Sometimes it does, sometimes it doesn't. So something to consider. This last week's been pretty crazy though, so it wouldn't surprise me if there is a little bit more volatility overall. Now with AMC stock, sentiment today is at 49, neutral. Message volume at 48, a little bit lower than yesterday, and the participation ratio is at 54, which is pretty much in line with where we have been recently. If we take a look at the Ortex data for AMC, we do have short interest that is declining a little bit. Short interest down to 12.78%, $146.1 million currently in short positions. Days to cover 2.13, 33.51 million shares that are currently sold short. Shares out on loan 43.46 million. Cost to borrow about 1%, utilization 58.88%, and a short score of 66.8 out of 100. Cost to borrow max sitting down there at about 2%. Now, option activity today, still the same one order that we looked at in the last video as well. It was a large order though. One trade totaling $1.9 million with a positive order value of 0%. It was this January 16, 2026, $7 put worth $1.9 million. So yeah, definitely a large trade for AMC standards. That's for sure. Now, again, option activities. This week's a large expiration, a triple witching, trillions and trillions of dollars of options expiring. So could there be more volatility? Of course, like I said. But if you do look at AMC specifically, he got about 12,000 calls currently in the money, 271,000 calls out the money. In the money puts at about 30,000. Out the money puts at about 111,000. So a lot of options expiring worthless for AMC as well. Hundreds of thousands to be more specific. So definitely want to go ahead and keep that in mind as well. Could cause more volatility for AMC, but we'll have to ultimately wait and see. 10-year Treasury yields, big story of the day today, regardless of what the equity markets are doing. I think stocks should be down 1 to 1.5% today. That's obviously not where we are. It wasn't that bad in the markets. But if you look at 10-year Treasury yields up about 10 basis points, it really highlights how bad that PPI number really was, because bonds, they tend to give you a clearer kind of read of the situation. And 10-year Treasury yields rising 10 basis points today definitely shows things were not super great out there in with the data that we got this morning. So a little bit problematic there. That's for sure. Percent of stocks above their 50-day moving average, that is down about 5% today. Now a coin flip, about 51% of stocks above their 50-day moving average. Again, not great at all. AMC stock just chilling down here, down about 3%, 3.2% to be specific. I think it's pretty simple, straightforward with AMC going ahead. You either are going to fall to new lows, new all-time lows, if the markets do fall from here and we do go through a correction, which could put you back to about $3 per share, or you break above that 50-day moving average to the upside, which is sitting at about $4.47 per share, and you get huge upside from there. Quite a rally. I would expect 36% upside to your 100-day moving average at $6.10 per share. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.